Hey guys, welcome back. My name's Johnny, and if this is your first time watching, I show you how to make money in the stock market. So if you like that kind of stuff, please feel free and subscribe to my channel and click the little bell so you don't miss anything. Alright, so just gonna get into it right away. I have another strong buy for you guys. It is going to be on Dominoes, and it's going to be ticker symbol DPZ. Now, I do have it pulled up on the Robinhood app. And for all of you that don't have the Robinhood app, it is free commission trading software that you can start with an email, and you sign up with like your social security and a bank account, and boom, you can get started. You'll get a free share if you use somebody's link, and that's basically how I started. So anyways, getting right into it, Domino's, it's had 32% growth in 1 year. Now that is amazing, guys. I'm going to show you why it's a strong buy, why it's not going anywhere, and why you could buy it today, tomorrow, and even next year. Now the volatility on it's very low. Let's go ahead and look at the 5-year chart. You have seen nothing but growth. That means you could have bought it in 2013 at $59, guys. That is a steal. So it has grown 381%, almost quadrupled its value. Now, with that said, it is in collections. It's basically labeled as food, manufacturing, restaurants, hospitality, pizza, North America, USA. But we all know it as what we love is pizza, guys. Pizza, wings, breadsticks. We love it. We eat it for the weekend, for football, for a lot of different occasions. We love to eat Domino's. This business isn't going anywhere at all. Lots of strong recent news lately. 52-week low of 166.74 with a 52-week high of 293. Guys, what a crazy spread. So much growth. It has $11 billion market cap. Almost 1 million in average volume at 130,000 on Friday. Has a 42 PE ratio, which is a little bit high, definitely, but it does make up for it in dividend yield of almost 1%, guys. So you are getting a dividend when you hold on to this company. Its Q2 earnings were estimated to be around 179, and they did shoot higher than that. They're right around 205 or 207 mark, something like that. They're also having earnings call date on July 19th. So it's a great delivery service. It's company-owned, franchise-owned stores, international markets. They have supply chains. They have this great new setup where you could order online, and there's also like deals. If you order enough, you can get like a free pizza, and you can get all kinds of promotional points and different things like that. So with that said, guys, I'll bring you over to the street rating. The street rating is saying that it is a buy. Now, that is a B, not a B plus or minus. It's just a B. But its annual dividend rate, guys, is $2.20 per year. Now, that is pretty good. This is saying that the dividend yield is at 0.77%, so that is probably a little bit more accurate. Now, another reason why this is a strong buy, guys, its price right now is nothing compared to what it's going to be. Its target price right now is $370. That's its target price right now. That is amazing because it's at $279 right now. 370, that's literally $100 for every share in profit, and it's just going to keep going up, and it's going to keep going up. And if you want to know more about the street rating, you could check out this cool little 3-page article that thestreet.com gives to you. All you have to do is just sign up with an email, and that's it. I don't get paid to say that. You don't become a member or anything. You basically just sign up, and it's just free information. So that is marked as a B. I love it. And then I'm going to take you over to the Market Watch real quick just to show you some different opinions and different analysts are saying about the company in general. It does have some good stuff on this end as well, saying you get about 55 cents every quarter, and the ex-dividend date, if you owned it before June 14th, you will be expecting a 55-cent dividend for this company. So it's pretty cool. Dividend yield on this one saying 0.79% with a market cap of $11 billion, guys. So they have plenty of money to spend. Their 5-day was a -1. Their 1 month was a 3% gain. Their 3 month was 20%. Year to date was 47%, and their 1 year is at 31% so far. So looking pretty good. Lots of ton of news on the topic and other competing brands such as Papa John's, Jack in the Box, Denny's Corp, McDonald's Corp, Yum Brands Inc. So you could always check those out as well. I'm doing all this off of Market Watch for free. I'm not even signed in right now. I don't have a login. I just found it useful when I typed in some research and have been using it ever since. So definitely do your research, guys, but that is why I think that it would be a strong buy. Has a lot of growth potential. So much growth potential. It's not going anywhere. People have to eat. We love it. We love football. We love eating pizza and wings. It's not going anywhere. So that said, Domino's is a strong buy and gets my thumbs up. So if you guys enjoyed this video, please smash the like button. And also, if you haven't yet, subscribe to my channel and share this video with your family and friends who might think this would be informative to them. All right, you guys have a great day.